Good morning. It's Thursday, July 24th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So some housekeeping. We will be rolling the July cryptocurrencies over today. If you hold those in your account, chances are I'll be reaching out to you. Now looking at the silver market here. So after reaching 39.91 and a half yesterday, the announcement of a trade deal with the European Union caused gold prices on the August basis to fall back below the $3,400 mark, down about $40 here, which negatively impacted silver prices as well. However, a full-scale liquidation in silver was avoided because copper prices continued to rise due to strong technicals and also fundamental factors. So you look at the copper market up about 1.8% at 592. That's up about 10 cents here. So looking at a data check, you do have gold August basis down about $30 here at 33.67. Silver futures down 20 cents here at 39.29. High in the overnight session on the silver market, 39.66. So you look at the tactical ranges here, a lot of red going down the sides of here and double reds here. And the double red means that you have a lower high on the probable range and then also a lower low on the probable range. So not a great setup here for the metals markets and for many of the different commodity markets out there across the board. So looking at the technicals, gold is back at that breakout level where many of you had taken positions off. We were playing that range here. You had an upward sloping trend line, and then also you had this resistance point that went on for about 30 days here, right around 33.65. So many traders elected to take positions off. We get the two-day breakout to the upside here. You get the announcement of a European trade deal as well as a trade deal with Japan, and then prices come back down here, and it's the two-day liquidation brings us back down to returning to that old resistance, could potentially be new support. So we'll want to digest and look at how these markets are trading here. This is the reason why we don't have the FOMO. And then also we now have the flexibility of re-entering the gold market by looking at the October contract. Not a recommendation out to the public. Something that we're observing here, we're going to want to use a wait and see multi-factor approach before getting in. Now shifting to the equities and some of the trade deals here, you do have global equities that are continuing to rally as investors gain renewed confidence from the indications that the U.S. may continue to pursue additional trade agreements following the recent deal with Japan. Looking at a measure of global stocks reaching new all-time highs here and record highs, the Europe Stock 600 index rose just under about 1% here, and it was really the strong earnings reports and that the news that the U.S. is reaching an agreement with the European Union, which would establish 15% tariff on most of the products. So futures for the S&P 500 slightly higher here, just under about the 6,900 level. You do also have 10-year Treasury yields pushing back up just a bit. Remember, we were playing the October call spread. It was the 112, 115. We saw Treasury yields sell off for about 3-4 days straight here. Big washout down to key levels of support. That's where many of you excuse me, had taken the positions off here, capturing some of that gain on there rather than owning the gold market. We went with treasuries instead. Now look at the NASDAQ here, the S&P 500. It's really this de-escalation in the global trade tensions that's fueled gains across the global markets, and it's reduced some of those safe haven demand for the gold market. Now, is gold completely out for the account? I don't think so whatsoever. I believe that gold is a new asset that many of these central banks are going to continue to own. And if you look at central bank holdings, they've really risen here, and it's really since about that Russia-Ukraine conflict when it started to get underway. You saw a de-risking of many outside currencies, and then what central banks elected to do was own gold instead. So if you look at a range of central banks out there, they've increased their holdings to about 20% of their FX holdings in that gold market. Now you look back at the NASDAQ, the S&P 500. So the S&P up about 1.5. Yesterday, we did let go a lot of those positions that we put on near those April 22nd lows here. So capturing about 500-600 points of the upside in the S&P 500, as well as many of the points in the NASDAQ, because of the fact that we noticed that we're seeing a V-shaped recovery in the global trade tensions and things like that back in the April market. So that's where we got the breakout, established those positions. Now we're looking to be just a little bit overbought here in the market. So NASDAQ up about 0.3%. Alphabet beat on revenue and profit expectations. Really, it was boosted by the demand for artificial intelligence. So if you look at Google and Alphabet here, those products And this stocks here individually up about 3%, trading just under $200 at 197.90. You go to Tesla. Tesla's really slipping here, dropping down about $20 here at 312.73. The company posted its sharpest revenue decline in the last decade. So if you look at the bear case for the U.S. equity markets, because I know there's a lot of bears out there, they're kind of in hibernation at the moment here. Really much remains uncertain here with about a week before President Trump's self-imposed August 1st deadline for reaching trade agreements with other countries here. So the United States has not yet finalized any kind of deal with its two largest trading partners, Canada and Mexico. So if agreements are reached here by next week, those countries could face 30 and 35% tariffs here. Currently, both countries are subject to a 25% tariff with some exceptions on certain products here. So also you have representatives here from the United States and China. They're meeting here in Stockholm next week for the third round of trade talks here. So looking at the markets though, after a 28% gain here from its April low, the S&P 500 definitely in some overbought territory. The problem with overbought and oversold, they're general terms here, and overbought tends to stay overbought for quite a long time here, which we saw coming out of COVID. It was the NASDAQ, the nasty Nas, that just kept going up and up and up, and it was by every single damn dip that was out there in those markets here, and excuse my language, to push those things back on up, because it seemed like nothing, no matter what bearish news came out during that period of time, could break the market here, and the bearish news was quite heavy here. So looking at the NASDAQ, one thing I don't watch here is moving averages. You'll notice that there are no moving averages on any screen, any kind of anything here. For entertainment purposes, maybe I'll put the 50 and 200-day moving average here just to see and write an article on the golden cross and the death cross and things like that, just because I find it quite comical. But the NASDAQ posting its 63rd consecutive day above its 20-day moving average. So that's its longest winning streak since 1999. So something to note out there. And I like bringing those dates up because it triggers people, because it's the setup here for what happened was the big bubble here. It was the big collapse in the markets and in the tech industry right around that time, the dot-com bubble. But it's not to say that we are not overextended here at these periods of time, but we want to look at the reality of where we're trading at, not where we want to be. So if we start the day on the S&P 500 right around this 6,400 and everything looks rosy and hunky-dory, we're probably going to continue to grind up here towards that 6,450. Now, on the other hand, if you are feeling bearish, you really want to see a drop below 6,390 and then a push down to about 6,352 on a little bit of volume here, back down to that key level of support. So we'll be looking at the ranges here and some of the critical levels. On the S&P 500, kind of that third standard deviation of an excessive sell-off, going to be kind of pocket support, 63.47 and 63.52. So we'll want to continue to monitor that. Otherwise, outside markets, you got 10-year treasury yields pushing up just about 2 basis points back at that 4.4 mark. So you do have the gold market down about $30 at 33.67 on the August. On the October, down $30, dropping below 3,400 at 33.96. Dollar index up about 22 points here, 22 ticks, trading at 97.16. At one point during the session, you had a big unwind where all the foreign currencies went up dramatically and the dollar got a bit of a rug pull. So I saw many of you start to kind of tiptoe into that gold market here, which is understandable, but you really want to see both things check off. You want to see the dollar index go down, and you also want to see 10-year treasury yields go down, and a little bit of froth and uncertainty going on in some of the trade tensions and things like that. And that's where you can get that gold market kind of reversing and turning back a bit higher here. So crude oil futures, impressively, we're up about $1 here, trading right now at 65.83 on the September contract. The August just expired here. Remember, on crude oil, the farther out you go, the cheaper it gets here at the moment. But you want to get too far out here because of the fact if you do have anything dial up in the Middle East, you'll see that supply shock really come in here. I did read one story here, and remember, much of the crude oil demand goes specifically to China. Now, the US and China are trying to reach some kind of trade agreement with agricultural products, with energy, with tariffs and things like that. China is one of the largest consumers of crude oil, and they've been getting their crude oil mostly from Russia and also Iran. But the story that I read is that really they've stepped up their solar, they stepped up self-generation, their grids and things like that, and they're really trying to become energy independent in the long run. So we'll see what kind of implications that has on crude oil. Are the days of 80 plus crude oil completely done? We'll have to wait and see how that plays out. Now, looking at crypto, looking at the price action here, again, you're in July, you want to roll. We do have Bitcoin futures just down ever so slightly. You have Ethereum futures just up here a touch. You look at Solana, you look at Ripple. Those are a couple products here that the exchange launched and are having record type of volumes here, especially in that XRP, down about 4 or 5% here at the moment, with the August contract trading at 317. So getting to some interesting levels here, a bit oversold. On the tactical ranges, we just don't have enough back data here on XRP in order to look at where those probable ranges are. So as we get more data and the market is able and the machines are able to digest and crunch the numbers of probable ranges here, I think that they'll become much more accurate here on your pin sheet. Now, looking at central banks, we do have that external communications here, that blackout period, July 19th to July 31st, 60% chance the Fed cuts rates at the September meeting. Earnings, you're going to have Blackstone and Intel, as well as PMI data should move the market with a little bit of inflation data coming out. And on the earnings front, it's early, but 83% of the companies have reported results, have managed to beat earnings expectations, and that is your highest level in 4 years. You go to the ETF flows, adding a little bit of gold, up at about 9.9% as far as percentage date of ETF flows, coming up about just under 10% here this year, and then silver about the same thing. So you got another big move up in the silver ETFs, adding about 5.5 million troy ounces here. And what's that do? Gold silver ratio dropping to about 85 to 1. So it's going to be interesting to look at here. Again, on the currencies, we'll talk about the rollover here. Gold, we'll look at some possible entry on that market here, and then also keep an eye on some of these other outside markets as well. Got any questions? Shoot an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.